evening. No clue what time you're watching this, but I found that intro to be very appropriate as the SPX made it back to 5150. For all of you tried to grow your long hair or had long hair back in the 80s, kids with the Van Halen 5150 album, you might as well jump. And lot of anxiety and emotions out there thinking about jumping off the edge of a building.
This executive order is for allowing people who are complaining about your tariffs to be permanently labeled as whiny, retarded, sad little bitches.
Hold it. This is a good one. Is everybody listening?
Because you had a market correction that was 2 days, Thursday and Friday, and we're going down today. Sunday night futures are about to open up here in about 20 minutes. This video will already be old by the time it gets out, but the Dow Jones is looking at a minus 600% start to the week. One thing I will point out before we go anywhere, let me just move this and get this going, is nope, not that, but that. This is the NASDAQ futures, the NQ. As everybody knows, the NASDAQ has made it into bear market territory because it closed below minus 20% from its all-time highs, 17,960 on the NQ. Bear in mind, just saying it, where you have come now to is your 23.6 retracement to the 2008 lows, your 23.6 retracement to, where is it? There it is, the 2002 lows. So, having done this for a couple of decades now, every time that I have seen those Fibonacci retracements, I have always been very assured the bottom is near. The bottom is near. The bottom is near. Do your own research, but I've done this quite enough times. So that is what I want to point out to you on the futures before they get opened up, and we'll get back to that chart in a little bit. But let's just make sure that we know how we got to where we got, because I will go here to Thursday, March 13th, the email going out, talking about, the this, the that, the that, the this, the that, the that, and everything else, and discussing every possibility that in a very short time frame view is due to be taking place. But most importantly, what was down there at the bottom was talking about since COVID, with the red weekly candles, which, as you all know, we did get a fourth red weekly candle, the Trump bear in mind view, blah, 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 but more importantly, showing you and displaying for you what your gaps are only going back to October of 2023 when Israel invaded Gaza. That's it. That's the only gaps I've shared in this chart, in this view, and your pivots to the downside on the way down to them. FOMC Quad OPEX for the week ending March 21, and I believe this went out on March 15th, something like that, because here's March 14th on the chart showing there. And the very first one showing, as you see, as we had that minus 10% correction at 55.04, we're looking for a bounce to the upside, quite likely and possibly to the 50-day moving average, having gap down below the 200-day moving average. And then the shoe was to fall off and kasplat down into the 53, 5200s. That's what was expected, knowing that we were going to be getting tariffs. Here on the March 21, same thing. Having had our minus 10% decline, our little rebound, we're looking at getting a little bit of a dip, another bounce to get close to that 5,800, get into that 50-day moving average possibly, and then the move down. We failed at 5,800, as you all know, because as we were sending out here just a week ago, the overbought warnings, the overbought warning levels, because we were so significantly overbought, the VIX was oversold. And we failed to produce anything that was able to be considered bullish. So, therefore, with the fall off of that, things started to get a little bit hairy. And as we went into the final Friday of March, as you all know, boom, 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 I'm not here Monday. And we had this going on, which I'll talk about in a little while if I have to, but I'm brand new to this Fibonacci spiral, brand new to it. So I have been mesmerized on how accurate the movement has been. It's not necessarily discussing a punctual top or bottom, but it has been very, very accurate. However, I decided to back check this and I started going back and I said, okay, so since we're talking about here the February 19th, let's go look at the COVID bottom. Let's go look at the 2022 bottom. And I started counting for the upside move. Completely and totally inaccurate were my findings. So therefore, this is a very nice piece of advertising, but it's something that I look at where I would call it my fifth go-to golf club. Definitely not my number one, but it does support still that we are looking at April 15th for a next proper bottom to be placed. And again, as we had everything going on. Tariff Day. As Tariff Day was coming there on April 2, blah, 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 blah. You got what you got, and you know where you were, and we were looking over there, and we reached right up here to that 56.95, right to it, dead spot on to it, as we went into tariffs, which were coming after the close. After we got tariffed, this is after we got tariffed, and this is going into 5 o'clock in the morning, couple of hours before the market opens. You've got your lows over here from March, your lows that we came down to just a few days prior, and here were the tariff reaction bottom lows, right at 5,500, call it 54.81, 55.37. Things didn't look bad. Didn't look bad whatsoever. And then the market opened on Thursday. And yeah, from Thursday's open with that 178 point gap down, which there's nothing you're going to do to get in front of that. Your 108 point range, 104 point gap down over there on Friday, and then a 222 point range. And markets don't bottom on Fridays, which again is why we are looking at seeing a gap down to come today on Monday. Not updating here as of right now, down 636 points over on the Dow, but this is what we were looking for. It's just a bit deeper than anybody expected because of these 2 days, which, if anyone's going to go out there and start posting, I was this, I was that, I made this because I was in this. I didn't tell you I was in it, but I was in it. So, here you go. They dropped down a number of notches on my respect ladder. So, yes, it was a complete and total failure of the $3 credit or any credit that you took there on Thursday because there was no bottom. Yesterday, Friday, sorry for referring to Fridays, yesterday. Friday, the last trading session which we were involved with, again, didn't look bad for what I was looking at, 51.20, 51.25, until that last 7 minutes of the day when they said, okay, rug pull. So I rolled it, as I said, and I had anticipated doing, was rolling it, and this is where I want to talk about here. The April candle, the month of April, is 55.97.53. Now, I spent Tuesday, I spent Wednesday, I spent even a portion there of Thursday talking about still expecting a green monthly candle. And now having reached to, let's see it here, minus 1,077 points over on the SPX since we started. COVID, we dropped 1,200 points from start to finish on COVID. A couple of weeks. Being that I am talking about a green monthly candle as my intention, one must pull one's head out of one's ass and start to view this as common sense. 5,600 is call it 500 plus points to the upside. So why would one not go to April 30th and be using strikes which were seen on Friday? Example, 5,300, 5,305, 5,100, 5,105. There's no need to be going up into 5,600 and trying to get a fill when there's absolutely no volume, number one. Number two, the credit that you would get on 5,600 compared to the credit that you would get on 5,200 are virtually identical. So there is absolutely no dumb retarded, don't ever go full retard purpose of waiting to get a fill up on that, what I mentioned at the beginning of the month, 55.90, 55.95, 55.95, 5,600, when you're 500 fucking points out of the money. Drop down your strike. Drop down here into 5,300, 5,305, 5,200, 5,205. The main point is get paid. Get that $4 credit. Get that $3.50 credit. Two things happen with that. Either you are going to make 400% on your money, 250% call it on your money, or you've got a sufficient amount of credit involved in that trade that if by chance you need to roll that trade as we get into the end of the month, there's more than enough credit that has been collected that can absorb rolling the trade out, closing this one to open the new one in a roll, and still being able to collect a little bit more credit. So your $4, you roll it, it might go down to $3, $3.50. Your $3.50, it might drop down to $2.50, $3. You still have an incredible trade that's on, but unfortunately, it's not a zero DTE where you get to be in today, out today, and put your money in your pocket. Welcome to the real world, because zero DTE is not going to make you as rich as you think it will. On to the QQQ real quick, and I'll bring you onto the charts because I don't think that many of you have the mental capacity to even understand what I was just saying there. So anyway, this is still going on 2024 because I was referring back to a few things which I had to go over and do, and I've got my pictures all off. So anyway, here. 39 points down on the QQQ last week. 39 points. I could be wrong on this. No, I'm not wrong on this. That is 39 points to the downside. Down 5.5% over there on Thursday. Down 6.25% on Friday. And again, everything is inside your QQQ. 1, 2, 3, 4, 5, 6. With the doji candle that we talked about on March OPEX week, which was bearish. You are essentially down 7 weeks in a row. Very similar to the middle portion of the big wave 3 from 2022. IWM completely thrashed. Didn't look bad. And then all of a sudden, Thursday and Friday, once you started getting down there below that 195, shit started hitting the fan. So again, with the tariffs and how everything in the IWM is made in America, sold outside of America, tariffs don't affect anything on the IWM, more or less. but the market doesn't care because this market needed to correct for a very long time. So before I bring you onto the charts, I will remind you here, April 13th, which is not this week. It is not happening this week. April 13th will not happen this week no matter what you do. It's not going to happen this week. April 13th is your full moon. On April 12th, nope, am I wrong? April 10th. On April 10th is your CPI report. Now, with today being the 6th, CPI report coming out here on Thursday, CPI is going to be your number one catalyst for the week, other than the reports that are going to be coming out on China and the United States sitting down to discuss a deal. So I'll get to this chart in the end of this video and bring you over here onto the SPX. Again, looking here at a 10-day, over here 57.86.95, that was there where we were failing. We knew things were getting bad. We had our drop there into Friday. Prior to the open of the week, I was kind of trying to hint, because I was out of town at the doctor's, don't buy the dip, don't buy the dip, don't buy the dip. And we had our little bounce, little gap down, little bounce, failed over here at 56.95, as you already know, there on Thursday, Wednesday, and ba-boom. Bang, bang, 2 days in a row. Hang on 1 second here. Okay, so we're back. And yeah, the coincidentally gap down there on Thursday into Friday, we gap down right below the 400-day moving average. Not that the 400-day moving average is anything that anybody goes and has ready to work with, but yeah, that's exactly where we came down to. And as you can see there, we broke down below the 23.6 retracement to the COVID lows. So again, on the bigger, broader, wider view, the failure up there at 57.86.95 was undoubtedly the B wave. Now, down on that, we have a clean 1-2 A wave, a 1-2 B wave, and as corrections always are, you have your ABC A wave, your 3 waves, ABC B wave, and then your 5 waves, 1, 2, 3, 4, 5 over on your C wave. And having broken the C equals A over here at 51.44, having it looked as if maybe quite possible, but no. So what we are looking at here is still the exact same. The big gap down there on Wednesday into Thursday, that is our wave 1. We have our wave 2. Wave 3 trying to be produced at the moment, which at the 50.23.68 would be the 161. A lot lower, which it can go, which futures have just opened up, as I can hear right now in the background. And a bounce for our wave 4, and then a final drop to the downside on wave 5. So let's see and show what this looks like from the bigger, broader, wider picture of things. And that's exactly what we're looking at. If you remember me sending out the image chart, whichever you want to call it, talking about our 1, 2, 3, 4, well, we are at number 1, exactly where we're supposed to be, which is at number 1. We're coming into our April lows from 2024. We are also coming into that 23.6 retracement back to the 2009 lows, right at 48.53, which again gives us our minus 20% correction, which was expected for a very long time. Looking at it from a gap point of view, what we will wind up doing here is filling the 2024 gaps, and we will be leaving all of the other gaps to be filled at a later date, because wider view going back to COVID, which unfortunately isn't on screen because it was now a little bit longer than 5 years ago, we've got our 1, our 2, our 3, 61.47.43, having been an almost perfect 100 extension, and we are looking at our wave 4 to be producing somewhere here, as it's here, somewhere here as the much needed minus 20% correction. And a break below 4,800, breaking down below that 2022 high, is going to put a lot of question into the bullish wave 5 view for the end of all of this. And instead, what we could be looking at is this being an ABC, where just like in 2018, this is our A wave, we get our B wave, which might go a little bit higher, and then our C wave is coming, which is going to be catastrophic down into the 3,000, 2,500 area. And over here on the ES, as you see, as we have gapped down, and where have we gapped down to? We have gapped down and made almost perfect contact with, like I said, the 23.6 retracement going back to the 2008, 2009 lows. Look over on our QQQ, and this is a little wishy-washy, as you can virtually see. A clean bing, bing, bing ABC. Almost looks perfectly clean. Your 23.6 retracements to your 2008, your 2002 lows, sitting right below you here at 419, 418, and our view of what we had been anticipating for quite some time anyway, was that the QQQ has everything in it. So I've got a couple of different views on this, but all of them are saying we have a high probability that we're going to be seeing 400. We could see 400 on this correction before it's all over. We could see 400, and we've got a couple of gaps that have been filled. Let me move that out of the way because that doesn't need to be expanded as it is. But we have filled this gap from back here in August, so that is removable. And we have not made any contact with the only gap left, which is from the early part of January of 2024, which is down here at 409, 406. And we probably will be making contact with that. But from a bigger, broader, wider view of things, no. We are not going to fill these gaps down here back to where Israel invaded Gaza and we're in the middle of, inventing AI back in middle part of 2023 because earnings are going to be kicking off in a couple of weeks. Now on your VIX.
I know what's wrong with you young people. You think you just fell out of a coconut tree?
You got your VIX up here at 45. Now, you go do whatever research you want to do. You go back and do whatever kind of backtracking, backtesting, everything that you want to do. Back here to 2008, 2009, when the actual world was fucking collapsing. VIX doesn't live up here. Doesn't. VIX doesn't live up here. Doesn't mean that the market immediately reverses because the VIX is up here in the 40s, above 30, above 25, above 21. But it's telling you that, you've pretty much taken it up the ass and felt all of the pain. Now all you got to do is breathe, inhale, exhale, and you're not going to feel it as bad as you felt it in the very beginning because things are going to get better. And then here's your IWM, which, again, IWM has taken the brunt of it because it always does. IWM was selling off a lot earlier than everybody else because that's what it does. And we have now retraced the COVID cure. Joe Biden's win back to November 9th of 20, I don't even fucking remember when he won, 2020. What was it, 2020? 2023, whatever. We've fucking retraced all the way back to that. We've got our two big gaps that are up here above. I can't find any other gap that is up above that because maybe there is, maybe there isn't. But yeah, again, same thing from a bigger, broader, wider view of things. You take out COVID and the move up from COVID, and here we are at the November 9th gap up because Joe Biden won, Pfizer invented a cure, and we're right back down here at multiple year support. 2022, 2023, pull you out here on the daily, even change the chart, put on a clean one. We're right out here. just hanging out here at this 160, 165 area. So, yeah, a little bit lower, absolutely. Quite possible. Definitely see a little bit lower over on the IWM before things kick off. And where do they kick off to? As you can see very clean, your 195 being your resistance area. 195, 196, right around 200. It hated being below 200 for a very long period of time. Well, now it's going to have to fight to get back up above 200. So that's what you got. That's where you are. There is absolutely no reason whatsoever to be in full panic mode that this is a surprise. Nobody knew it was coming. Everybody knew it was coming. He even fucking announced that it was going to be coming on that day. And I don't feel the need to get into the explanation as to why this is a good thing. I don't, because you've got the ability to go out and do your own social media research to get the explanation in the English language or other language that actually fits your ringtone and can explain it to you the way that it starts to make sense for you. But here, from a monthly point of view, you are getting that get in to long alarm. That's what you're getting here. Your monthly, right where it needed to be, oversold. And I shit you not, if this all works out the way that it should, if it works out the way that it should, we're going to be looking at SPX 73, 7500 as we go into the 250-year birthday of the United States next year. So enjoy your Sunday. Enjoy every single thing about your April 6th. April 7th is tomorrow. CPI is later this week. The full moon is on the weekend. And I will see you guys very soon.
Whoa, that's not good.
Oh, I don't need this. I'm already late.
Somebody will come. Anybody out there?
Do you have a phone?
No. Sorry. Somebody! Hello? There are two people stuck on an escalator and we need help. Now, would somebody please do something? I don't believe this. You gotta be kidding me.
I'm gonna cry.
Well, there's not enough left to do. That's it.